Good afternoon, everybody. It's RT here with Hxro Labs on part 2 of how to spot a trend reversal. Now, you may notice a few changes to this layout because as I was recording last week and I went through what I had originally put up, I thought, first of all, this is way too complicated. So as I went through it, I realized that most of what I do really comes from the Fib retracement tool, the MACD, and a basic conversation about market structure. So part 1, we really talked about more background stuff like how to spot basic things like higher highs, lower highs, those kinds of concepts, which type of chart to use. Today, I'm going to get in a little more into the nitty gritty with Fibonacci Retracement tool, the MACD, and then putting those together with that market structure we talked about in part 1. Now, if you haven't already, what you should do first is go and click on the 1 Minute Alpha series video about the Fibonacci Retracement tool right here. Now, that video will tell you very briefly how the Fib retracement can be applied. So looking at this daily chart and the Fibonacci tool, drawing from this high, dragging it down to the March lows, we are in an area where I am searching for trend reversals. Doesn't mean that it's going to stop here and go down, but it's certainly not an area where I'm hunting for longs. I was hunting for longs down here. Now I'm hunting for shorts. As far as where and when to look for trend reversals, we are in that area. And as you can see on the daily, we actually did start to see a trend reversal right up in this area. And we even got that bearish retest. So there's no reason for me right now to be very bullish on this chart. Even though I love Bitcoin and I want it to go to the moon, I'm actually in a position where I'm feeling like, I could probably get some cheaper fairly soon. And so the question is, what am I looking for to confirm it? Well, on the daily, the downtrend is already confirmed. You may remember that from part 1 of this video, and that confirmed right here. So this is all just trending down. The real drop won't happen until that confirmed trend reversal occurs on the weekly. Now, it's fair to say that we've got a lower high right here, because price came up and failed to clear this high. So for now, that's a lower high. Of course, we could just continue up. But if this low breaks here, this is definitely a lower high. And at that point, this would be a lower low. And it will accelerate fairly quickly down to this area, likely into the low to mid 9,000s. And if this low breaks, we've got a very strong signal that the trend is over and likely going to pull back. And at that point, I can start thinking about where I think that new downtrend will end. And frankly, it's probably going to be in this short or in this RLZ down here. And when you're up in these areas, no one ever thinks that will happen. So don't go around asking people's opinions, because up here it's always like, yeah, we're going to the moon. We were going to the moon up here. Here we were going down to 2K. This is where Bitcoin died. Here we were going to 50K. That's why I don't ask people's opinions on price anymore. This is where trading becomes very tricky, because when location comes in that tells you you want to short, all you want to do is long. Or when the long location comes in where you should maybe be buying things, often it's very tricky to do so. So with using fibs to get a rough idea of where I should be looking for trend reversals, and again, this might blast through, it might not. How can I add to my conviction when it comes to taking a position, exiting a swing position, or whatever? For that, we have momentum indicators. And my favorite momentum indicator is the MACD. Now, for a quick description of the MACD, you can see here, the MACD in this case is the green moving average here. Now, exactly what that is a 12-period EMA minus the 26-period EMA. So it's just two moving averages combined together, creating their own unique moving average. Now, the second line on the MACD is the signal line, and that is this pink line here. And the second line is a 9-period EMA of the MACD line. So this pink line is an average of the green line. Okay, so let me just really quickly summarize that. The green line is an average of price over the last 12 and 26 periods combined, so 12 minus 26. You don't really have to understand that to really trade off this, but it helps to get a little bit of background information. You can look up more on Investopedia, of course, and any other MACD resources you want. And then the second line is just an average of that MACD line. Now, my favorite part, the most important part of this study is this histogram, and that is measuring the distance between these two moving average lines. Okay, so as the MACD histogram gets larger, that means there is more space between them. And as they come closer together, they cross over, and that's right where the MACD switches down into bear, okay, or flips bearish. This histogram is really just a visual representation of the distance between these other two moving averages. So how can we apply that to the chart in a meaningful way so that it gives us important information we can use to trade. Well, right now we are up here in the short RLZ. Now that might be great news because eventually we will break above these prices. This MACD gives us a sense of how fast this price is moving. What is the velocity? What is the momentum? And if it makes a sharp, fast move up, the MACD lines spread apart and the histogram grows rapidly. In this case, price went higher, but the MACD actually made a lower high. So it is losing momentum. We could say that they are in divergence. Oftentimes, as things get higher, the momentum just continues to go higher. I'll show you that right here, right? We had a high, we had a higher high, higher high, higher high. Momentum just kept increasing. And so there was no divergence. Price and MACD were in agreement. But in this case, there was a very strong and obvious divergence, right? Price continued to go higher, but the momentum was gone from the market. Does that mean it has to roll over? No, it's not a complete signal, but it is something I will look for. So if I've got the location right here, I'm up in the short RLZ. I've got the divergence right here. The MACD is telling me, oh, not only is it in a shorting location, it's actually losing steam. And then you end up with the third and final piece, which is, do I have market structure? The lower lows, the lower highs, etc. And that to me says, oh, maybe this is a confirmed trend reversal. So flipping back to October 2018 to give us an example of how we could apply this information to spot a trend reversal that would have saved a lot of money. Now, a lot of people in October 2018 were saying that this is the bottom. Look at this. Every time it touches 6K, it goes up. Longing 6K is the best thing you could have done all year. As you can see here, it looks pretty obvious. I mean, we obviously know what ended up happening, but lower highs, lower highs, lower highs. And yes, it wasn't making lower lows yet, but it hadn't made any higher highs. The trend was down. Whether you like it or not, whether it's been a year or two or not, whether Bitcoin looks cheap or not, there just wasn't an uptrend to be found. So waiting and learning how to spot that trend reversal would have saved myself as well as a lot of other people a lot of money. What I want to do is draw up this fib so that I know when and where to start thinking about a trend reversal. So we're down into this RLZ, but I've still got a few more things I need. I need to see divergence on the MACD, which I don't see yet. So let's go take a look now. On the latest drop, the MACD has finally put in this divergence. So price came down and made a lower low, but the MACD, in fact, made a higher low. In fact, it barely even flipped negative on the second part here, which really shows that the speed and the momentum of this down move had come out of the market, that the sellers were drying up, getting bored, getting exhausted. The bulls were starting to overtake. Now, price hadn't made any real higher highs yet. It was still trending down. So this is an incomplete reversal, but for now, it's giving me some clues. I'm watching carefully. Price actually went on to make another low. MACD still in divergence. That divergence confirmed here. But for now, what we've got is a lower high and a lower high. So we've put in a higher low here. So we're starting to think, okay, we're consolidating. This might be a trend reversal, but where is the signal? Well, the signal really can't come in until you break this high. Until that, we're still just trending down. So keep an eye on price as we moved along through January into the new year, 2019. And a lot of people here getting a little concerned with price. Is it going to make new lows or not? Well, surprise, surprise, off of this low with that divergence, it is possible to then draw up another fib from this low to this high and measure this move. So with the style that trading that I use, I'm looking really closely at this level because it's close to the lows, so I can risk to these. If they break, surely I'm screwed, so I'm going to get out of my position. But if they don't, I just got an entry down at a really sick level that even though we're still in a downtrend, if this is a potential reversal area, then I'm going to be sitting real pretty through the next uptrend. So as we chop around in this smaller RLZ, we did get a little breakout there, which is actually confirming a new tiny little market structure. And this is why the stuff gets really complicated. So I don't want to overcomplicate things for a short part 2 video, but really what you have to understand is all this stuff we're looking at on the high time frames, you can then just zoom in. The markets are very fractally. You can do this on a 1-minute chart if you want, and you'll find this stuff all the time. But the smaller the time frame, the less strong the signals. So right here, you had a couple of lows come in, you had price break to a high, and then we started this own little mini uptrend, right? High, higher low, higher high. So there's trends within trends within trends. And that goes back to part 1 when I talked about really defining what time frame you are trading. In this case, for the higher time frame trend, which is ultimately what we want to be finding if we're going to be swing trading, which is what I like to do, we need to break above this level. Otherwise, on the high time frame, this is all just more 6K noise and we're not going anywhere. So it wasn't until later on in the spring that things started to look up for Bitcoin. As you can see here, we got stopped once trying to break through. I believe it was somewhere in April. And once price goes off, I mean, I can just set alerts here and say, well, oh, look at that. You see here, that level was so significant that as soon as it broke, money just piled in. So it's often hard to catch those moves as they happen when you have that, but that's okay. It's a trend reversal, so it's not about finding it and catching the breakout. Now we can say this trend is officially reversed. So there's a high probability that price is going to continue in the new direction until further notice. So do I rush to buy the new high, or do I hunt for a higher low? That's really up to you. That's diving into a deeper, kind of more complex scope. As you can see here, as we speed things up, that was a really happy trend reversal, and it really was a perfect application of all the concepts that I've taught in this quick part 2 video. And if you really wanted to find the top, I mean, 6 short RLZs here at work again. There's so many tools, so many things and ways you can apply these. But really simply, guys, I want you to just remember the Fibonacci retracement tool can give you a location on the chart. The MACD can give you a sense of momentum on the chart, and then waiting for that market structure, waiting for that higher high to come in. In this case, waiting for that lower high to come in. And as far as today's price action goes, waiting for confirmation of this daily trend. Now, in my opinion, we got that right here. So this was your bearish retest, and we are in a downtrend. Now, if this high breaks, if we break up from here, that would change my tune, especially if we break up from here. But for now, we're simply trending down on the daily. So where to look for a trend reversal? Well, you already know that I'm probably going to take out my fib tool as a first measure, and I'm going to drag it from the lows to the highs. Unfortunately, if we keep trending down from here, it does look like this would be an area to be looking for that trend reversal. And it would actually be pretty standard price action as we'd come down to this breakout level. Wouldn't that wash out a lot of hands from the market? A lot of people would get pretty wrecked. They would start selling their Bitcoins to all the strong hands down here. And if we do get into that area, I'm not going to predict and call for it, but if we did, I would bet that the momentum on that down move would start slowing, that there's a good chance that we would see a trend reversal. Come hang out with us on Hxro Labs Live. We'll be talking about this stuff as it happens and practicing these concepts day after day after day until they are second nature to anyone who's watching. If you appreciated part 2 of how to spot a trend reversal, hit us up in the comments. Let me know. If you have any suggestions, thoughts, tips for more concepts you'd like to learn, you can let me know. And other than that, hit the like, hit the sub, and we'll be back on Hxro Labs Live 3 days a week. Part 3 will be coming out as soon as I can finish it. Take care, everybody, and always play from a position of strength.